Welcome back to another video, guys. This video I'm just going to cover strong highs and strong lows and weak highs and weak lows. Now, first of all, I want to start off with this PDF because this PDF explains everything we need to know and is simple to understand. It is in the PDF section on a Discord, so whenever you need to take a look at it to remind yourselves, it will always be there. So let's have a look. We're in a bearish market. We're making lower lows and lower highs, as we can see. So this is our impulse. This is going to be our pullback phase. When in our pullback phase, demand is obviously in control. Now, when demand fails, when we're at our supply zone, and we get a change in character so that demand doesn't hold, supply now takes over again. This now becomes weak. This is our target. This is what we want to target. Why is it weak? Because, we don't have enough buys in the market to take out our recent high. So once now this low is taken out, which it does, this now becomes strong. The supply outdid demand. And the same thing happens again, right? So we pull back and we expect this now to hold as it's a strong high, which it does do. Demand is in control and the internal leg comes up. Supply now takes over. This becomes weak. This now is our target. Now, what's important now, we come down into a hard time frame POI, and this is the sort of areas we want to see this happen. So we can now expect price to come up and respect this supply, so this high, this strong high, to go on to make a new low. Now, we get the interaction, we get the reaction we want, comes down, but now demand holds. So the internal supply that was in demand, that fails. We get change in character. Demand now takes over. This now becomes weak. Why? Because this high didn't have enough sellers to take this low. This is now our first target. Now I just want to go over that to, show you guys on a diagram because sometimes it's easier. Some people learn better like that. But let's now have a look at the chart. Now I just want to use this example here, this price action here, because it explains it well. We can see here this low is taken out. So this high is now strong. This is a strong high. Okay. This here is a strong high. Why? Because it takes out this low. Comes down. We now get, as we can see, demand back in the market, comes back up into our supply. We then get what I was talking about earlier, the change in character. So high taken, now this low gets taken. Okay, so this low doesn't hold. This demand doesn't hold. So we get a change in character now. This now becomes weak. This is our weak low. So we can expect now this low to be getting run. Okay, which it does. There we go. Okay, so now this becomes a strong high. This here, strong high. Price comes back up, back into supply, which we expect would normally run the low. But as we can see, price comes back down into demand. Okay, so we now have demand here. We don't break this low. Okay, the internal leg supply, which was holding, now gets taken over by demand. This is taken out, you know, we get this high taken. So now this shows that demand is back in control. So now we get this supply taken out. This now, what we was expecting to be a strong high becomes weak. Why? Because we can't take out this demand. We failed to take out demand. Okay. And what happens? Okay. Again, the high gets taken. This now becomes strong because we had enough buyers in the market to take out this high. And then it just changes again. Then the same thing happens again. Strong low, strong low, because we failed to take this low. You know, we get the high taken, the low taken, and now this is our first target. Again, we come back in. This is strong. This respects it. First target now is there. And the same thing happens again. Obviously, we get this. This now is our low, which went on to take on that high, take out that high, sorry. And again, we get the change in character here. So we get the low taken, the high taken. This supply is fails to make a new low. This now becomes weak, and this is our target. Okay, cool. And I want to now go on to another example. This is just like a higher time frame example, because obviously this can happen on all time frames, but I just want to show you this on the 4 hour, the power of why we use this. Now we're obviously in a bullish market because we're making higher highs, higher lows. So here we got, you know, strong low because it takes out the high. We come back down. We see that we come to this flip zone. We get the change in character again. We get this low taken. Let's zoom in a little bit. You know, we get this low taken. Okay. It's always good to mark this as well as you're going along because it gives you, you know, keeps you in touch with everything. Low goes, high goes. This now becomes weak. This high here, this is the highest point. This is what we want to target. That becomes weak. And again, we're just following structure. We're following order flow. And again, we take out the high. Now, same thing happens here, right? So we got this high, come up. This high, this low, sorry, takes out the high. So this now here is a strong low. So once price comes back down, we can expect, or we would like to think that this would go higher and respect it. Well, it doesn't. We get interaction and then demand gets taken out. So now we have a shift in market structure from bullish to bearish. This up here now becomes strong because it took out demand. So it goes to show there's, you know, the sellers are outpowering the buyers. So this now becomes strong. Now we can expect price to come back in here, and once we get a change in character, so we get the high taken, low taken, our first target now is the low. And what happens, and always notice as well, look at the aggression that this low's taken, you know. Now this becomes our strong high because this should now hold because we've taken out this low. So we're following, so the supply should hold. Now this is a nice one. So you get the high taken, low taken. Let's just mark that properly. Now, the why I wanted to show this on a higher time frame, right, is because with what we understand and how we can get in the market with, our entry criteria and the tight stop losses we can get, the 1 to 2 pip stops, which everyone's going to be getting soon. We're getting in here, right, on the 1 minute chart. Now remember, this is a 4 hour chart. So if we're getting in at these areas and these highs, this now gives us the confidence to be able to hold these trades to the higher time frame lows. Once we get the changing carrots on the 4 hour, okay, so we're short, we see that we get this demand fail. We know now that this is our target. So this gives us the confidence now to hold the trades from here to down here. Now this is when we're going to see 1 to 20s, 1 to 30s, 1 to 40s from these areas with the understanding of the strong highs and weak lows. Um, and it's just really important to understand these things. Again, we add it to our trading, and it all comes down to confidence and holding these trades. But with the understanding, we can build the confidence. And one thing I want to show as well is we want to understand that these are going to be happening at significant areas, okay? We don't want to be um, random lows to be taken and thinking, right, that's weak, that's strong, that's vice versa. Let's have a look. This okay. As we can see, then we have this demand here. We have this strong low which goes on to make this high. Now, price comes down. We can expect this strong low to make a new high, which it doesn't. So supply takes out this demand. Now, this is now our flip zone. I'm not going to get into other things, but I just want to show that it's important to be looking at these areas. As you can see, this is now a POI. So this is why this demand doesn't hold, and this is why this is now a strong high. Okay, and I think that's really it for strong highs and strong lows. Like I say, once we start building a really good understanding, then this can be really powerful.